All right, now what you're gonna see, I have audio, and you should be able to test the audio coming through here just in case. Test, check. Testing audio. That's coming through there, right? So we're good. I will. I wish there was a phone. I'm gonna now mute my microphone just for a second. Audio test. This is a test. Should have audio coming through right now. Audio test. This is a test. Should have audio coming through right now. Awesome. All right, Lee. You got my audio on right now, bud? Okay. I'll be ready for you to come to me live as soon as I find my book. Hold on. All right, buddy. You can come to me live. And no, don't start the other recording until I'm gonna talk a little bit, and then we'll start the other recording. All right, come on to me. All right, ladies and gentlemen, welcome back to the Rob Review. This is a live recording. It's been a while since I have done anything online. It's really been a while since I've done anything on TV in general, and I just wanted to come on and take a moment to set the record straight on a few things. Everybody that watches this on a religious basis and that is a part of the newsletter was wondering if I had just kind of disappeared. And over the course of the last year, especially 6 months, I haven't really done anything content-wise because some things changed in my personal life, and I was also building out a new studio that we could use to do exactly what we're doing right now, where I could build and record and go live a couple times a week and also have my team record me while I'm doing it. And so what my team and I tonight are going to do, we're going to do a live recording of some videos that I'm going to release throughout the week, while I'm also going to be live on my channel and live on television later on. So the idea here is to start doing this on a regular basis. Took a while for me to build out the studio and get the equipment and get everything going. And tonight is the first live that my production staff back there, one guy tonight, Lee's really helping me out, is using this. So we're going to work with what we got. We're going to learn as we go, because that's what the stock market is all about. And there are some updates that I want to give you to doing this live. It's not all going to be strictly recording of videos, although when I record videos, I will possibly start and stop. If I need to redo something, I'll redo something. And so what you will get is the full live viewing of me actually recording an educational content video. But before I do that, I'm going to start coming on here hopefully every other Saturday night, and possibly some more times in there we're going to schedule. But right now it's looking every other Saturday night, starting with this Saturday at around about 6 o'clock, right before I do some other shows that I do on Saturday night. And I'm going to come in here and we're going to focus on the stock market, building wealth, what I have done in the last week that has worked, where I am trying to go, and so y'all can gain some insight from it. And you know, I'm trying to build a community of independent investors. My goal with the Undercredited newsletter is, and I'm also getting licensed to, focus on helping independent investors with 5 figures or less grow into the 6+ figure investment portfolio and receive a regular income from that. That's the goal. All right. With the Robb Review, the goal is changing. I'm going to start just focusing on people that are about my age group. And I want to help anyone that's in that age group figure out how to build out a system of building wealth for themselves independently using the stock market and building out an actual financial plan. There's some great books out there. One that I was reading this week called Managing to be Wealthy by a guy named John Sistina. And then there's another book I'm going to reference tonight, which is called Simple Wealth, Inevitable Wealth. And those books, I encourage you to go out and find a copy of them. They will allow you not only to understand the stock market better, but understand the power of owning securities and build an actual tangible plan that both you and your spouse can live by. And that is a major mistake that a lot of people make. Certainly I am guilty of it, where you figure out a way to earn a lot of income and you figure out a way to successfully build multiple streams. You get the stock market business going that we've talked about in the past, and you've got trading income, you've got covered call income. You're building wealth, you think. But then you go through periods where it's not all working for you and you're having some losses. And if you don't have a plan in place, you can get backtracking and you can get into debt and you can find yourself going from high income to behind the eight ball very quickly. And that happens when you don't have a plan. And I have learned that systemically multiple times. And you would think it wouldn't take multiple times, but that's why I'm so strong now on the idea that it's not about trading. Trading is just a way. Options trading, futures trading. It's just a tool in your tool belt to gain more momentum for your money. But it's not the only and should not be the only thing, and it's certainly not wealth building. Wealth building is having a systematic idea of you earn $1, where is it going to go? You earn $10, how much is going to go in what pockets? And certainly if you're not giving back, there's a lot of things that are not working for you that you could have working for you. And so that, I had to say all that to set up that tonight's live is to just get into some things about building real sustainable wealth. And I'm going to record a video here in a minute talking about that. But before I do that, we're into April, the 9th day into May. We're into May, 9th day into May. I am getting ready to leave to go to a wedding for my brother. And as he's getting married, I'm thinking about starting out life with a plan and how it doesn't matter where you're at, you can always start from scratch. And I'm thinking about how a lot of people don't realize the power of having a plan going into every single month for what they're going to do, especially in the market. I sit down, and sometimes I'm behind the eight ball a little bit. Like this month, I was doing it on May 1st, May 2nd, my trading plan for May. You want to do it before then, but you want to have a plan for what you're kind of looking at trading, how much you're going to put into each trade, what historically happens this month, earnings that are coming up, if you earn profits, which generally you will, where they're going to go and where they're going to go into, and once they go into, what you're looking to buy with those profits. All of that should be a part of your plan, and I like to keep my plan. I used to do like 10 pages. Now I like to cull it back 3 pages or less. I hope to one day get to where it's just on one page, a one-pager trading and investment plan for the month. And I don't do just for the month. I do for zones. And my zones are kind of like May right now into October, and I've got a whole zone plan. And then I'll make another zone plan for October to January, and then January back to May, a revolving door of plans. Those plans are what keep me disciplined. And I know I usually wear a suit. It's rather warm in my studio, and just not doing that tonight. Can't do it. And I wouldn't be able to really actually have fun and teach with you. I've got about 45 minutes left. And so with that, I'm going to try to record 2 videos. But before that, April results. How the market kind of went according to my plan. I don't know about yours, but the tanking that we saw in the market at the end of April was pretty much on par with what we generally see year in, year out, especially the last couple of years. That tanking allowed for a massive amount of profits to be made on the put side. I left April out with 189% gain in the trading account and small gains in the income account, which I'm going to talk about tonight, using a strategy that I'm developing that allows me now. I've always talked about covered calls in relation to earnings and doing it during earnings. And we're in earnings right now, April, May. But what do you do the other months? And I've been trying to develop a strategy that allows you to do that. And I think I found one that's very, very predictable, systematic, and there are services that can do a lot of the research for you for this strategy. And so that's what I'm going to get into here in a minute. And it has to do with buying and selling stocks. And specifically, once you get good at it, doing the covered call thing. That's always a plus to have that in your back pocket. And then adding to it secured puts. Some people call it a wheel strategy, and that's certainly a good thought process for it. It's what I'm doing differently is I'm not just choosing any stock. The way I choose the stock makes it a systematical, step-by-step, profitable plan that I really think is something that once shared and once you understand will allow you to see that a 15% gain that I had this month in my income account is very doable and very targetable on a regular basis. And you're not going to hit it every month. I didn't hit it in February. In February, I had like a 6% gain. But that's still better than the majority. You know, a lot of people think 6 to 10% a year is really, really good. And as young individuals in the world, as, you know, I guess really I'm a millennial. As a millennial or younger, we've got to figure out a better way to do it because we're up against a different set of circumstances than our parents. And this is how to do it. So with that being said, I got to get a little Pepsi here. Vault stock. Just saying. Obviously, I'm not endorsed by them or anything, but buying stocks that you can see that are consumed on a regular basis just makes sense to me. You know, I've recently had to start taking on a more big role in my wife's business, which, you know, she flips homes, really major projects, and I spend a lot of time in Lowe's, and I now am looking at buying a lot of Lowe's stock because I never before realized the quantity and volume that comes through just my local area Lowe's, not to mention nationwide, right? All right. So, Lee, I'm going to go over here and grab my phone, make sure it's not going to go off. All right. If you're ready here, man, what we're going to do is got a couple people live on here that are going to be thrown off by this, but we're going to record a video for me to release later. And what this video is going to be entitled for all of you watching is in your 30s, building wealth in the stock market, a proven system. Okay. Obviously there's tons of different systems out there. So Lee, if you're ready, you just kind of count me into a recording secondary. Okay. Welcome back to the Rob Review. In this video, I want to give you a step-by-step, really a two-step system, a formula for a repeatable way to build wealth in the stock market over a 10 to 20 year period. This video is not for those of you that are looking for get rich quick. That's not what I talk about. That's not what I do. I don't believe that there's a really good, reliable, and ethical way to do that. This video is for those of you that realize that 10 years is going to pass whether you live and do things with your money in a smart way or not. So why not build a system that allows you to, after 10 years have gone by, have a substantial amount of wealth. And that's what we're going to talk about, this two-step system to funnel money and build wealth and build a secondary income stream that allows you to not just pull money out of your pocket to buy stocks, but also to have a constant funnel of money so that when an opportunity presents itself in the market for long-term buying, you're not looking for the money, it's already there. Okay? This idea has always been around, but the stock market, to me, I look at it in three pieces. It is a three-legged way to build a foundation to having wealth in the stock market, and that wealth is built by long-term assets owning securities, owning equities in the stock market is how wealth is created. But the best way to do that is not to pull money out of your pocket unless you're a real high income earner. But even so, you're still limited. It's to build a system where you're trading, you're creating more income for yourself, and a lot of that money extra is funneling over here to the third piece of the puzzle, which is vault buying of securities. All right, Lee, I'm going to ask you, is everything going okay in there? Okay, cool. All right, let's pull up the first. Let's go to the computer for a second. What? All right, just go to the computer for me. Okay, cool. Equities versus other investments. This idea is as aware to me now than ever before. And so, hey, Lee, I tell you what we're going to do. Come back to me. Yeah, now that you figured it out, let's start this recording over again because I think it could be a little bit better on the front end. So if you'll just stop it. All right, you got it stopped? All right, we're going to start it again so that I can really get a good jump on it. All right, buddy. We're going to go here when you're ready, on your mark. All right, welcome back to the Rob Review. Today we're talking about a real proven system. You saw the title. It's not clickbait. If you're in your 30s, I want to talk about a two-step system of building systematical funneling of money to an account that allows you to buy long-term assets. Securities, owning of equities is how you build wealth. It's proven any amount of time, chop it up in any 10-year period, any decade period, going back to the 1900s. It is the best, and I do not say that lightly, best way to build wealth if you are a first-generational wealth builder in America. So that being said, how do you make sure that you can afford the types of securities that you want to have in your portfolio? Because a lot of stocks are very high priced today. That's what this two-step system is about. It's about understanding that assets are built through systems, and systems allow us to build multiple streams of income, even though we're just very big. All of us out there, I assume if you're watching this, you're not somebody that wants to get rich quick. You're somebody that understands that I'm going to have to grind it out, I'm going to have to work at this, and this plan that I'm talking about right now, this two-step system, is going to take some work. It's going to have some risk associated. But the time period of 10 to 20 years, putting this to work can change your financial future for decades to come. And those years are going to fly by, so why not do something about it so that 10 years from now, you're not saying, oh man, what am I going to do? You're saying, oh man, I'm ready for this, right? That's what I'm talking about. So, to begin with, the power of equities versus other investments. Let's throw to the computer real quick. 20-year bull markets. What am I talking about there? Debt securities are for saving, wealth, and preservation, not for growth. And then setting up a funnel of money into ownership of quality companies gives your family a generational wealth growing asset. Those things are true. Back to me, man. I want you to understand that those three things are the topics I'm about to hit on. 20-year bull markets, they don't always happen, but a 20-year bull market you can create for yourself in the market by having a two-step system. Equities are going to ebb and flow. The ownership of those stocks over a long period of time is what builds wealth. So nobody can time the market. And I know that some people think that I am this guy that believes in market timing, and that's not true. I believe in market awareness, and that you need to buy and sell for a certain sect of your money. But this sect of your money that builds real wealth is owning quality companies and hardly ever selling them unless you're forced to, because the company no longer has a viable competitive advantage. The 20-year period of holding, go back and look at any chart. A book I just read showed me this in bold color, in bold print. I mean, it was true. Going back to 1920, chopping it up, any 20-year period, never did you have a negative return if you reinvested dividends all the way up to today. Now, that being said, think about it. Was it buying and selling? No, it was holding those equities through some very, very turbulent markets and through times when fear and greed, but mostly fear, can get the better of you. And that's the part of this you got to think about. A lot of us, including myself, have been guilty of this. The overestimate of holding stocks and the underestimate of the risk of not holding stocks. You know, we think about, okay, we're risking a lot of money having them tied up in a stock when it tanks. That's risky, right? But what's more risky is having this money that's worthless sitting in a bank account or tied up in a debt security instead of owning an asset. So it's the risk that you have to really evaluate, really think about it. Fear and panic selling. That is something that if you get control of, you can build wealth. And if you have a two-step system versus a one-step system, it makes the fear and the panic selling dissipate to a great degree, because you know that you can build out money over here even while it's losing over here. And there's things you can do with options in the put category during a decline to offset the losses of the greater. And the fourth piece, you know, no one can time the market. I just said that. Market timing takes so much work. And you're not going to want to do it, or at least I'm not going to want to do it forever. And you can't time it perfect. But learning how to trade is a work in progress skill. Learning to buy quality companies takes a whole lot less work. And the skill set, there's so much more leeway for being wrong in there, because so many companies out there right now scream quality just by knowing people are using them. Waste Management, Tesla, Pepsi, Lowe's. Those companies are going to grow as long as our economy grows over the next 10 to 20 years. You don't know what the stock price is going to be, but you know it's going to be higher than it currently is. And there's the rub, man. There's the rub. All right. Computer formulae. Building a money flow instead of one stream of income for buying your stocks. Back to me, man. What am I talking about? All of us out there start with one stream of income, our first job, or our current job, or our current business, where we do one thing. We go to work, we work for a client, they pay us, one stream. Even if you're out there and you're building 2 or 3 businesses, you got multiple streams at that point, but are you funneling the money into buying quality stocks? Because if you got one stream of income and you're here pulling money out of your pocket every month, I've got $5,000 coming in, I've got $4,000 going out, I've got $1,000 left, let me buy some stock. I put $1,000 over here, okay, another month, $5,000 comes in, $4,000 out, $1,000 over here. Over 12 months, you got $12,000. You can buy a set amount of shares and then on to the next year. Versus if you had a system where you could compound half of the money. So take 6 of it out and put it in a separate account, and then you're over here buying and selling, compounding that, and then the 6 over here has bought. Now you've got quality ownership in Tesla, for example, and then over here you're trading some company that you can afford to trade with $6,000, and then you're compounding your results, and every single time you close out a trade, a piece of the profit is going over. And that's what we're talking about, man. That is what we're talking about. All right, here we go. Buying, selling, and compounding low price stocks in trading ranges, moving 1/3 of the profits to what I call, and what I've been taught to call, the vault. All right, Lee. That is the two-step system. There are so many companies out there right now that find themselves in trading ranges. Okay? I'm going to give you 2 examples here in a minute. And those companies can be bought using a quality chart software, or there's TradingView and those types of things out there. And you can find the trading ranges yourself, buy into it, and sell into the rise, and target a particular return. That's what we're going to talk about. All right, so my thought process here, my system, is what to buy. Stocks under $50, caught in a trading range that's been determined by the daily chart going back maybe a month or 2. There's services out there that now do this. I use channelingstocks.com, and it allows me to not have to do so much research. I used to have to do a ton of research on this. They send me 12 stocks every month that I can watch on my own charts to find my own buying entries, but they tell me what the trading range is. And I'm able to go in there and buy X amount of shares, and they're optionable, which means if I wanted to, once the stock starts to rise, I can target a good till cancel sell order up 15%, and I can either sell it, or I can hold it without the good till cancel sell order. As it ticks up beyond my 10 to 15% target, I can sell an option, covered call, once I'm good at it. After I've done this for a while, sell an option or a covered call, sell an option, which is a covered call, and pull the money out and let the stock continue to rise, and then sell it even higher. And the stock begins to turn around, option expires worthless, and or buyback, sell the stock because the target has already been hit. We've got the 10 to 15% in the bank. It's just there, and we're holding it. That's the difference. There's 2 different ways to do this. What I like to do, and what I did do in the beginning, is I would find these stocks. A lot of them are under $5, $6, $7, $8, $10 range, somewhere in there. And I'd buy the stock as it was rising, breaking out of the trading range. Okay. And let's say it hit like from 10 to 11. Okay, I'll show you some examples here in a minute, but once it got to 11, I could sell the $15 calls or the $12 calls, depending upon the stock, and get that bid upfront premium and keep holding it. And then it would rise a little bit more, and then the option would expire worthless, and I'd sell the stock. Example. Buying money flow. There we go. There's what I'm talking about. Now these charts, I couldn't pull up my charts today. I don't know why. I don't know why it's not working. So I just got these off of like a big chart free platform. Live One, stockcharts.com, actually where this came from. This particular system came off of Channeling Stocks, this stock. And as you can see, it's stuck in a trading range somewhere about 425 to 575. Okay. As that thing bounced off the floor of 525, I bought it around 450 and I let it rise. I never sold covered calls on this, and I was able to sell it for a profit because you can see it went much further than that. You know, that high was somewhere around 525, and I was able to get a decent return on that. I think that was a 40% return. The next piece here is oh no, this is the 40% return. That the live one was about, yeah, that live one, the LVO, that was about a 12% return. But right here we got the Riot platform. This particular stock really jumped off the page. It's in a trading range. It started to rise. I bought it right around here on my own charts using the MACD that I do use a lot. I don't use any of this other stuff down here, but I use the MACD a lot and the stock RSI. And as you can see, it broke out. I owned it going into this. I bought it about $13.50, and I sold it somewhere in the 17s. Come back to me. Those are just two examples. Numerous stocks do this on a very regular basis. And earnings as a catalyst can be an even stronger motivator to get into some of these stocks. But even when earnings isn't going on, like next month in June, we're in warnings, you can do this. 12 months out of the year, you can do this. And if you target that 15% range of return, even when you started, maybe you go a little bit lower, maybe 5, maybe 10%. Build your understanding by taking profits, not too early, but quickly. And then along the way, grow your comfort zone of letting the profits run. And 12, 24 months down the road, you're going to be so comfortable with this that you're going to see that a 12% return a month is a pretty regular occurrence. And it's so regular, in fact, that on the months you don't have it, you're shocked. And you can pretty much set your watch by it, which means the other piece of this is what's left of moving the profits, because I talked about moving 1/3 of the profits. What's left, the 1/3 that doesn't go to taxes, can be income. And that's the beauty of the strategy. The movement of the money is the power here, the compounding, not just the return on the stock trade, but over time, the 1/3 movement and buying of quality companies. It doesn't matter what you do over here. The vault will get huge, and that's where the wealth is. All right, cut. Cool, man, cool. I love that. All right, ladies and gentlemen, what'd you think about that one? I don't know. If you got any questions, I do have a few people that sent in questions on the newsletter. One of them was, because I've talked about this channeling on the newsletter before, one of them was, how can you really know when's the right time to buy? Like, what if you get faked out? Well, with stock, you don't have to be right now. That's the beauty of it. With options, your expiration once you buy, I mean, that time decay is moving against you, right? With stock, if you buy and it pulls back, as long as it's in a trading range and it's pulling back to the support, you can hold it. If it doesn't break the support, you can hold it and hold it and hold it. And unless there's another stock that you're seeing starting to break out and you need to sell it and move your money, you can hold it for a long time to see if it'll eventually get back and start picking up off that support line. That's the beauty of a trading range. And I can't believe all these years have gone by that I've overlooked this as a possible strategy, because the money left on the table here. I mean, there are so many stocks out there in this $50 or less category that nobody trades really, because there's no movement in the option, that they're kind of like the black sheep of the stock market. But it gives you three things. Number one, big leverage on a small account. Number two, consistent returns that are not stomach churning. Because when you got $10, $20, $30,000 in trade, it's different than 10 or 8 or 5 in a trade. And if it's a $5 stock, like if you're looking at Live One on the computer here, that stock, pull it up for me, man. That stock is a $4 share stock. You know, $4,000 buys you a decent chunk of that stock. Come on back to me. So you're not risking a lot. And the third piece of it is, I haven't seen it happen yet because I haven't been following these stocks long enough, but I'd venture to say that some of these will break out as companies to own because their viable competitive advantage will show up. And that research will be done by once you see a company that you're trading enough of, it's growing, you can probably link it to what I call the big dog, little dog strategy, which is that company is getting a lift off of a really big name that has started to do business with it. You might be able to not just benefit from it, but to buy a $10 stock and ride it up to 100. Now, that doesn't happen every day. That's more of the lottery effect than really stock market discipline. But it can happen. I've seen it happen to people that I know. And so that's an option for using this strategy. Now, I'm going to try to record one more video here. And I don't have it written down in front of me. So what I'm going to do is have to step off the screen. Oh, no, wait, here's my book. I have my book that you can see through. Oh, how fun. How fun. I need to build out a bigger studio so I don't have to use this. All right. How to build from 5 to 6 figures in the stock market in your 30 to 40s. Oh, man. I can really kill this. All right, Lee, you want to take another shot? Maybe if you want to take the time to change the title of the video real quick before we record another one. Can you do that? Mm-hmm. Oh, cool, man. All right. You on the ball, dude. Everybody needs a Lee. Just saying. Part of their team. All right. Okay, well, if you're ready, we can rock and roll with it then, man. All right, I'm gonna let you kind of count me in here. Mm-hmm. Welcome back to the Rob Review. I have always been somebody that wants to show people a systematic way of building wealth. And the stock market, if you're 5 figures or less invested, you might be freaking out in your 30s wondering, how am I going to compound this into retirement income? Well, I'm about to show you a systematic way to go from 5 to 6 figures over the course of your lifetime, eventually hopefully 7 figures in the stock market. So here it is. The first piece of this is to understand that stock market wealth does not come from doing anything other than owning securities, right? I know it sounds boring, but go and do yourself a favor, and when you're done with this video, tab up the Forbes wealthiest top, however many they do on a list now. The billionaires on that list, all of them, 80% of them, maybe more, are billionaires from ownership in a stock. A company that they were either passed down stock in or they own stock in. You know, I mean, I can just name off tons, but just for reference, Warren Buffett, Elon Musk, Bill Gates. And you say all these people are founders. Well, no. Not all of them. And Bill Gates, though founded Microsoft with Woz, oh wait, maybe it wasn't Steve Wozniak, but Bill Gates founded, it wasn't, but Bill Gates founded Microsoft, right? I tell you what, Lee, let's do this one more time. I know it's 6:50, so I got to bang it out, but let's do one more recording start for me. Welcome back to the Rob Review. What I'm going to talk about today is a real, honest to goodness, get down in the nitty-gritty way of building a 5-figure or less portfolio into 6+ figures in the stock market. And if you're already in your 30s, I turned 35 in a week, it's a possible freak-out scenario. You know, you're thinking, how am I going to build wealth and retire and take care of my family? by just saving my way to it right now? Well, that's because I don't believe you can. And you shouldn't try to do that because it's the hardest possible way to do that. I have real evidence of that in my life. So my grandfather left my grandmother a substantial amount of money, multiple six figures, to live off of. And even that amount of money, she blew through before she passed. And my grandfather spent his entire life saving, being smart with his money, doing all the right things to have that sum of investment money. If my grandfather had used a 3-pillar strategy to funnel money to the stock market, he could have continued to do it long after his retirement, and my grandmother could have had a dividend income instead of a lump sum that she then had to subdivide and budget. So the first step is a system. I like at least 3 different accounts doing 3 different things. Number 1 account is your vault purposeful buying account. You're buying companies like Waste Management and Lowe's and Pepsi because they are quality companies and they're going to grow over time. You might eventually take a flyer on a company that is out and is hot, and you're going to buy it and own it for a couple of years. But in the beginning, you're going to do a systematic, well-chosen list of 12 to 10 to, or less, 10 to 12 really, well-chosen stocks that are dividend-paying, optionable, global, that you can see have a great management team that cares about the company, cares about its team, its growing employee team, and has the shareholder as not the primary, but certainly a important part of the company's role. Okay? I like that, and we can get deeper in the weeds on that at a later date. The other account here, it's very, very important, is the trading account. This account is where you're going to target a risky but accomplishable 10 to 20% a month trading options or futures or whatever you may choose. It's not the purpose to worry about the tool, which would be options or futures. The purpose is to worry about the money management, because once you learn how to trade, the money management of this account is what's going to make you wealthy over time, because the trading is just system. But the moving of a third of the profits over to your vault is where wealth is going to be built. And then the third piece that's really going to change your life is the income that is built in an account where you're going to buy and sell stock and do some covered calls, options on those stocks. That is done in 3 separate accounts: your vault, your trading, and your income replacement. And the income replacement, once you get to a point where you have 20 times your gross monthly income in an account, and you're basically able to make 5% a month regularly on that amount of money, 3 to 5%, you are at a point where you can see the light of being able to live off of that income. And if you don't need it, you can constantly move that to the vault. If you do need it, well, keep growing your ability. And you can get to a point where I made 12% last month. I only needed 5, right? I move the rest of it. And I've got a regularly scheduled payment going into my vault where I am always going to be ready if opportunity presents itself. That's a simple, straightforward way to begin to apply in your investment life. No matter whether you do it independently or with an advisor, where you can start to see real compounding take place. Cut. All right, we got that done. All right, with that, ladies and gentlemen, we're going to end this stream. I got to go and prepare for my next show. So, appreciate you tuning in. Remember, the real wealth is built by buying quality companies, knowing them over time, not letting fear get the best of you, and selling out of companies when it's declining, because then you're just going to put yourself in a position of not being able to earn back what you lost. You're going to have to build your way back into earning that back. And when you have a loss like that of 25% or more, it takes 50% plus more to get it back to even. That is a hard road to hoe and to build back from. So with that, Lee, roll the little logo reveal, and we'll get out of here.
The views and opinions expressed in this program or any other Rob Review program are not to be considered financial advice, and all these strategies have their own inherent risk. If you act on information given in this show, you are doing so at your own financial risk. MAP Productions does not take part in your positive or negative financial results. That is why I recommend you consult your financial advisor before acting on any of these tips. What worked for Robbie may not work for you exactly as shown in the show.